Mortgage rates tick up ahead of the FOMC meeting. Now, again, recording date, air date. This is going to air on the date of the decision, January 31st, when the Fed concludes their 2-day meeting. So we are recording this before that. But, basically everyone's kind of saying, okay, the Fed has to cut rates. Well, do they really? How many should they do? There's a lot of dissenting opinion on how many. Yeah. And here's the real deal is when do they start? Should they start right now? Should they start in March, April, May? What do you guys think?
I mean, this is a balancing act that they keep playing on. They have to.
It is a circus. Yes.
It is. It really is. It's like you don't know which way to go.
Yeah. What do you think? Do you think they're going to start cutting rates in March, April, or May?
I think they're going to listen to, all the financial analysts and all that stuff that I've been asking them, like, come on, Fed, you got to start cutting down. I think they're going to listen and see where we're going, especially now that inflation's kind of started dropping. I think that's going to put the Fed in a position where, okay, let's try it out, because it could always go up.
So I know they're going to listen. I agree with you on that. When do you think they're going to make their first cut? March, April, or
that's
May?
A good question.
When do you think they're going to make their first cut?
You know what? I think if they make the first cut, I'm going to say it's going to be around April.
That's what I was going to say. Dang
yeah.
It. All right. So April
just
for you
March,
and me.
March for the history that I've seen, March is always.
I have a nerd answer. Here's my nerd answer. I think they're going to do it in April because they're going to have an entire quarter's worth of data in 2024. January, all they're looking at is quarter 4 data. They already have it. They already know it. They're not going to do anything. Yeah. There's no reason or urgency. Honestly, I think if they did it in January, they'd probably be like signaling, we have a problem that we haven't told you about. Oh, there's a problem we haven't told you about. I think that'd be the reaction. March, I think there's wait to get the first quarter data. You might as well. What's another 6 weeks? I think the answer's coming in April. We're going to see our first rate cut.
That's where it is.
What do you think, Brian?
I think I'm right with you. You made a good point saying that they're
after I sold him the idea.
You sold him
yeah.
I like
I'm sold.
Wow, Andy,
makes sense.
Where's your why?
Yeah.
So no, I think that makes sense. Like you. When you said that you'll have a full quarter of data, I think that's true because if they come out of the bat, right now, make a move, I think that might, break things. And I think they need to get more information to really make a decision. But they're on the hot seat, and I don't think they know what they're going to do. And there's going to be literally a gameplay decision. But at the same time, I think April because
it still gives them plenty of time to achieve this like 5 or so. Who was floating 5 or 6? Someone was floating like 5 or 6 rate cuts. I'm like, what? Every freaking meeting you gonna do one? No, not gonna happen. I think it's probably gonna be 3 to 4. If they start in April, it still gives them plenty of time to kind of get through the summer and then see what quarter 2 looks like. And again, not going to get into and dive into the politics of it all, but there are politics of this thing where they don't really want to rock the boat during an election season. Or if they are getting political pressure, they're going to be doing it in the favor of making things look better leading up to the election day. So,
but to William's point, on the inventory, right here it says, but inventory is still likely to remain an issue for homebuyers this year. Caution Lisa Sturvant, can't pronounce her name, chief economist at Pratt MLS. To stay within budget, buyers will have to talk through trade-offs and compromises with real estate professionals who understand local market conditions. So I think that you're going to be right, but I still stick with the optimistic. But it's going to be a tough year. Same thing. They're not going to be able to build enough houses. And I don't think, there's enough sellers to put all their houses up in the market to still be able to, compete with all the demand. But it is going to be a struggling year. And my thing is that I feel people just need to get into their investment and wait it out a little bit, get that equity, and then be able to use this as a stepping stone to then get to your primary or the investment that you want. Because at least, you can hedge against rising rent prices, and you can, have a fixed payment, wait it out, refinance down the line, and be able to use that as a stepping stone to get to where you want to be.
Well, one of the things that was quoted here in the article from the Freddie Mac chief economist was he was saying, given the stabilization in rates, potential homebuyers with affordability concerns have jumped off the fence back into the market. Like he's stating the same observation that we are, and he's saying it from the chief economist seat at Freddie Mac. And that's these two things together I wrote down here to share with you guys. It's behavior and math.
That's behavior and math.
The math is allowing them, the behavior is pushing them. And, I understand why people in the comments are like, oh, this is a terrible time to buy a home. Yeah, maybe for your situation, that's fine. Maybe for me, it's a terrible time to buy a house. But maybe not. Because if I'm going to go and buy a place and hold it and then put it in my trust and let my kids have it, and then in 30 or 40 years, it's worth 3 times as much, I'm not going to look back and think, oh, wow, I really shouldn't have done that in January 24.
Absolutely. No, and hey, thank you for the comments, but everybody's, where they're at, their city, the state that they're in, it's very different.
Yeah. Oh, yeah.
I mean, we see the sales. I just used an example earlier, 91913, where I bought my first house, and then I went, a few years later, I bought a 91914, and the difference and they're like right here.
Yeah.
It's like a mile and a half.
Yeah.
No,
If
about
that,
2 mile.
if that,
They're
yeah.
really close.
2 mile radius.
Different zip codes and
Within 5
completely
miles,
different
for sure.
pricing metrics.
But
yeah.
and these are the things. That's why for a lot of people, those little things could actually already sway your decision, And so a lot of times, get into real estate. It's all about doing your due diligence, making sure that you got that right realtor that's going to understand the zip codes, the differences, et cetera, and just kind of position, what is it that you're looking for? Where do you want to be at? Where do you want to raise your family, et cetera? And then you make that determination based on those things.
100%. Yeah.
I'm glad that it was Freddie Mac saying that, so I could go, hey, it's behavior and math, because we've been talking about that. The people that were just eliminated or I shouldn't say disqualified. They just the approval wouldn't go through because
they got math out.
8%. Your $250,000 job doesn't afford that. Payment, but
crazy.
Hey, at 6.5, guess what? Boom, you're back in the game.
I mean, guys, you remember people were making 70, 80,000 and would be like, oh, they're getting a house, no problem.
Yeah.
Oh, yeah, absolutely.
Now you're even leering with 150, 200,000.
I know. Isn't that crazy though? Like take
take
that into context. I mean, we started this in 2005. And in the last 18, now coming on 19 years, it's like $100,000 used to mean something.
Yeah.
$150,000 used to mean something.
I mean, we're talking about 2014, 15, 16. It was still there. You made
even then too.
80,000. It was really good.
Should have been born 15 years earlier.
Now it's like, how many hamburgers can you get with when they're costing like $20, right? Like,
I went to McDonald's the other day, spent $20 on 3 things. I was like, what the I came here because I didn't want to spend money.
Yeah.
Nope.
Stick to the dollar menu.
There is no dollar menu anymore.
There isn't no more? Oh my God. That's how much I do shopping.
Well, I'm glad you brought up the part about staying within budget.
It's the value menu. Sorry.
Yeah, the value menu is still $20. I'm glad you brought up the point about staying within budget, but talking through trade-offs and compromises. So again, this goes hand in hand with the whole behavior comment and the math. It's like, cool, the math works now. What kind of compromises are you willing to make? And I'm not talking about compromises of like, oh, you're buying a place without heating and a roof. I'm talking about like, oh, okay.
Supposed to have that.
Oh, the paint color sucks. Oh, you don't like the carpet or you hate the tile. Fine, those are all things you can fix.
The cabinets, stuff like that.
Yeah, but the compromises, I want everyone to understand, like the compromises don't necessarily mean you're going to have to deal with things that like no one should have to deal with. These are like really preferences, I would say.
The compromise is like, hey, you're just going to have to adjust your living situation for a couple of months. Maybe, stop doing date night every other day and, just adjust yourself to being able to.
Every other day. Man, that sounds awesome. I would do date night every other day.
One of the things, shifting here, one of the things I like best of this article here is at the end where it says, in January, builder confidence came in strong. Well, of course.
On the strength of declining mortgage rates.
Of course.
Wow.
Well, guys, they're controlling it as a builder right now.
Inventory.
This is heaven.
Great.
This is like heaven for them right now.
They got a blank canvas.
Yeah, like anything they build right now, like they.
Tell remember what I wrote here.
They wait. Oh wait. They waited, and it will pay off.
They waited, and it will pay off. That's exactly what happened.
It's like this is great for them.
Yeah,
this is so good for them.
Hey, every seller's like this. I mean, every builder
around the tree.
Yeah. They're getting in. And, here I go with the supply of homes also with all of this because social media and everything that's doing, like everybody's buying homes.
Yeah.
That's the thing. That's like the new thing, right?
Yeah.
And so remember, when they go in there and they negotiate, they're wholesaling, they don't put those houses up on the market.
Right. Right. They're not hitting the MLS. Right.
Correct. They're not hitting. So that's data that you're
not
not going to see. So that's why I'm saying like everything that I see that I'm around, and because I'm also an investor with that, it's like these things don't hit the market. I'm going to buy it straight from the owner at a discounted price, right? Because hey, I see how much work is going to go in there, so I'm going to offer a discounted price versus you going in there, put in the MLS. A lot of times it's probably best that you did do that anyways.
Yeah.
It's like the inverse.
Yeah. So I just think that all those numbers, we really don't see them. So it's like
skewed data.
Big time. And 2020, oh my God, that messed with us. That's
totally
what got everybody, hey, social media. So you could do it from home. You can buy here in another state. And guess what? You can.
A lot of people did that.
It's crazy because, you make a great point. I didn't know about wholesaling. Well, I did, but it wasn't popular like it is now.
Oh.
No.
You see everybody, all you got to do is get a phone, call this, get a list from your escrow agent, get it under contract, and then sell it, get an escrow, and then get paid.
Done.
And I'm like, oh, okay, wait.
Yeah.
So then
Yeah.
I'm quitting my job.
Yeah, there you go. That's what it is.
No.
So that's why. But okay.
No, that's good.
Great
But
insight.
I'm glad
That's
you made
good.
that point. I wrote that note pre-show. I was like, they waited and it will pay off because it will.
Guys,
They're
it's
going
paying
to, They're going to cash in.
It's paying off. Down here, like in our area,
Sky out.
it's a lottery.
I know.
It's a lottery.
Yeah. So,
Like-
so people outside our area, do you understand? Like the lottery, what he's talking about is you're going to get picked if you can buy the house
you
or
can,
not.
yeah. You have to go still to be placed in that lottery. You have to get qualified to get the loan with their in-house lender.
Yeah.
And then you better cross your fingers and your toes and pray to the acceptance gods that they accept your offer.
They pick your name out of a hat. Yeah.
Yeah.
I mean, yeah. So
Look,
again,
so if you believe in that little foot, the bunny rabbit foot thing, gives
is
you
it
good
what,
luck.
rabbit's foot right now?
Rabbit's foot, yeah.
Rabbit's
you
foot on the show? Okay.
Hold on to that
Yeah.
thing.
Well, yeah, the lottery. If you are also living in an area that has a lottery, drop your city name and zip code in the comment box. I am very curious to know where else this is happening. So for us, it's happening right here in 91913 Chula Vista, California. I'm going to put that in the comment box, but you tell us where is it you live, and is there lotteries happening at developers and home builders in the town you live in?
You know what would be another cool one is what kind of incentives are they giving?
Oh, that's a great one.
Because there's one right here, $29,000.
For what? For
For an
closing
incentive.
costs or
Closing
well,
costs.
No, I mean for like to use on the house for upgrades or what?
You can use it however you want, right? When
Oh,
it credits a
it's
credit, it's
open.
given to you $29,000. You could use it for closing costs, buy down your rate, etc. In this case,
I didn't know if it was conditional.
yeah, in this case, it was really bad for our client because, I can't give a $29,000 credit like the builder can.
Well, right.
But anyways, what they were using is $24,000 to buy down the rate.
Oh shoot.
Yeah, and $5,000 is going to go to the closing costs. I go, no. Leverage, increase your interest rate so you don't have to buy the rate because you're going to refinance in 8 months when rates cuts the rate, and then you could actually do a rate and term refinance. And now you could spend that difference instead of that $24,000 into paying all your closing costs.
Yes.
So there's actually ways that you can actually maneuver through this.
Yeah, and I think in the time frame you're spreading, you're putting on the table here, that spread of that is actually
It was
$250
$250 a month difference.
Well, that's what I'm saying.
Going from that 5.5 because it was 750,000. Don't fact quote me on
No,
this, okay? But
it's
I think
fine.
it was like 250, 280. But it was way worth it. 280
that's what I'm saying.
times.
Let's
yeah.
use 250. Let's just say 250 for easy math.
Yeah.
250 is you're gonna and in 24,000. That's 40. That's 96 months.
Yeah, correct.
So you have 96 months before you've actually tilted it against your favor to figure it out, let the market give you a better rate and refinance.
Yeah.
So
Like, yeah, that's what I calculated too.
yeah.
okay, I got it. I
Just
get
did the
it.
easy one. The 250 times 9 months.
Hey, and then
Next
Will.
show.
Yeah. Same.
Next
I agree.
2 thumbs up.
yeah, good.